We'll be getting started momentarily. Okay, we should be live on Facebook, and you should have sound this time. Hi everybody, I'm Sami Abasad, Director of Education at T3 Live. Welcome to our weekly videos. Hope you're doing well. Hope you've had a good weekend. Usually I do this video on Saturday, but this weekend I guess I got a little busy. But here I am. Let's go ahead and get started. First, a disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. So make sure to agree to that before proceeding with the video. Also, for your viewing pleasure, a free ebook that I put together with my best tactics and secrets. If you'd like to download it, link is in the description. Link in the description below, okay? I also dropped a list of the stocks that I'm about to review with you in the description of the video, so feel free to copy that and paste it into your watch list and follow along as we review them together. So with that said, let's turn on the charts, and if you find benefit in today's video, you know what to do. It helps me out a lot by if you hit the like button on YouTube and Facebook, of course. All right, what I do every week is review the market and then go over the individual ideas that I'm going to be watching, some of which I will be actually playing tomorrow, Monday. Okay, so first the market. The market remains bullish, extended. So if you look at price, pretty far above the 20 MA, no question about it. But it remains bullish, and it does not look poised for a pullback either, because if you look at the hourly chart, we're above the moving average. Usually when we get a pullback, the 20 MA starts to go flat, and we start to break under it a little bit. So here we're above it, so even if we come in a little bit, it's unlikely that we would break it without some pull basing maybe, and then maybe towards the end of the week. Honestly, I doubt it. The market, all I'm going to say here is the Q is continuing to be bullish. The SPY is poised for a pop here, in my opinion, looks higher. The Russell 2000 and the diamonds are in a world of their own. They're much weaker, especially the Russell 2000, much weaker than the Qs and the SPY. But they don't look bearish necessarily. The diamonds and the IWM are actually the easiest to analyze, because if we just break under this red bar's low, then we are lower, okay? And then the same with the diamonds. If we break under Thursday's red bar, then we're lower. So those two are pretty easy to analyze. The SPY looks higher. The NASDAQ is really bullish, but a bit extended. Usually you don't want to start, let's say, you're thinking about buying some of the tech stocks, the high-tech stocks. Well, the NASDAQ is extended, so usually, the right place to buy is when the market pulls back to the 20. You see this? That's the right place to buy, usually. Not up here. Up here is when we usually come in, a little bit. But I'm not necessarily predicting really a pullback. Somebody on last week's video commented that we were going to drop this week, because of the bad coronavirus related data that came out last weekend. And that person wasn't paying attention, because the market has been ignoring all that negative data about the virus forever now, for a long time. So the market doesn't care about it. And I discussed this in the room last week, and somebody in response said, are we entering into a bubble? Because if the market is not reflecting reality and it just keeps running up, isn't that what a bubble is? Okay, that person had a point, but we don't have the kind of environment needed for a bubble. What kind of environment is needed? An environment where everybody's bullish on the economy, everybody's optimistic about the future, a lot of companies going public, right? A lot of IPOs. That kind of environment. Remember the environment we had in January, at the beginning of the year, February even? How everybody was saying, oh, this is the best economy in the history of the country. The president kept saying it, didn't he? And then what did we have? We had a crash. That's usually the kind of environment that precedes a crash. This environment, we have I mean, half the people, more than half the people, I would say, are pessimistic, not optimistic about the economy and the future, right? Are worried. So it's not really the right environment. But the Nasdaq is truly kind of running away, and is becoming more very, very speculative, is definitely not reflecting reality on the ground for sure. So maybe there is something happening with the Nasdaq. Maybe there is, it is the beginning of a bubble. Let me show you. If we look at the monthly chart, I mean, that's a lot of bars in a row, and they're pretty big. But notice, in order to have a bubble, usually you want to have the biggest bar comes at the top. So we have the smallest bars, the last two bars. So we got to have like one big bar, at least the biggest bar, right? If we look at this run up here, from here all the way to the beginning of 2018, the largest bar came at the top, and then we got a pullback. The same here, largest bar came at the top, and we got a pullback. Same here, this was a huge green bar, and then we came in. Up here, these are big bars, make no mistake about it. They're not. They're actually getting smaller and smaller. To have a climactic top, the bars need to get progressively bigger and bigger usually. So my prediction is, I don't want to talk for too much here because I can keep going and on and on. My prediction is that at some point, money at this point has been, so far up until now, money's been flowing into the tech stocks, the high tech stocks, okay? So the stay-at-home stocks, and perhaps if money starts leaving the Nasdaq, it will just simply rotate into the go-out stocks, the travel-related stocks, the oil stocks, the hospitality stocks, the airlines, but not entirely leave the market, because where would you put it? Interest rates are at zero almost, very low. Real estate market there's no price discovery almost in the real estate market because it's shut down almost. So where would the money go, the majority of the money go? It would probably stay in the market. And for that reason, I think at some point, yes, we might have a little bit of a crash in the Nasdaq, but I think the money will mostly leave the high-tech stocks and go into the rest of the stocks, mostly the stocks that got beaten down when the market sold off and haven't recovered very much. So maybe there will be more of a rotation rather than money completely leaving the market. But truly, this is a very, very unique environment. It's nothing like I've ever seen before. I've traded during the last recession, 2007, 2008. I was full-time at that time also. This is nothing like it. It's very, very different. I'll do a separate video on this topic, on why the market rallied, what I think is going to happen in the future, because I don't want to make this too long of a video. For now, let's just look at the swing ideas for next week, okay? Again, if you're just tuning in, I dropped a list of the ideas that I'm about to go over in the description of the video, just for you, so you can copy and paste it rather than have to type it up. A lot of the biotech and pharmaceutical stocks have been very, very bullish. As you all know by now, the biotechs has been the place to be, in addition to the tech stocks, of course. So I'm prefacing this because I don't really like the AMPE very much on the daily chart, but it does look good on the monthly. The monthly looks like a transition A. So I do like it on the monthly, and it's a low price stock, and it's also a pharmaceutical in the right sector and in the right price range. Okay, so I like it higher over the base, stop under the pivot, and more as a long-term trade. Target is about 130. Target is the prior high right here. This should be 130. So up here is where I would expect it to go. But it's not my favorite idea. I'm not going to be playing it. I picked other ideas, but this is not one of them. BKEP is extremely thin. It's it shouldn't be on the list, to tell you the truth. But since I forgot to remove it from the list, because usually I don't share with you the absolute really thin stocks. But I like the transition area that's forming the breakout on the monthly chart. So I like it higher, okay? I mean, this looks really good, but extremely thin. A BMRA, another probably biotech, pharmaceutical, yep, BioAmerica or BioAmerica, looks higher. We do have multiple green bars in a row. I like to have a straight base, like so, rather than a slanted. I mean, this is kind of, it's been moving up a lot, so it's not going to be one of the ones that I'll play, but it does look higher over the base to 1130. Okay, stop right here. You have 2-to-1 reward to risk on the BMRA. CENX is a breakout on the daily chart. The entry would be over the base. Stop would be just under it, okay? On the CENX. HEXO, I was not, I've been actually, if anything, bearish on the cannabis stocks. I didn't trade them, but I was bearish on the cannabis stocks. And I'm starting to flip my bias on the cannabis stocks. I think Tilray, HEXO, there's also Crohn, CGC, there's a bunch of them. But my favorite would be the HEXO as a long if it takes out this basis high. Okay? If it takes out the hourly basis high, which is, I think, 76. So over 76, stop would be, these are bad ticks. I don't have the, I mean, these are bad ticks. The stop should be under 65 or 64. Okay? So basically, under 68 actually. But basically under the hourly chart, under the hourly support. So I like the HEXO higher for next week. It looks better on the weekly chart. That's a transition A on the weekly chart, okay? On the HEXO. Next on the list is the HIMX. This is more of a long-term play. It's also a transition A on the monthly chart. It looks higher on the monthly. It could use a tighter pattern. It's not very tight, to tell you the truth. But there's a buy setup on it over $4 with a stop under 370, and I would only play it if you were thinking long term, not short term. Short term, it's not good enough to play as a short term play. Okay, IAC, I like it as an hourly based breakout. Every week, I mean, last 2 weeks I looked at it and I thought it's gonna break out, and it just kept moving up. Actually, last week it just based. So this week here, over the base, stop right here, looks higher, and the sky's the limit because they did a spin off. So the sky's the limit on this. There's no resistance basically. INFN and the XNET are identical basically. They both look higher on the monthly chart, monthly buy setup. So this would both would be long-term trades. Entry for the XNET would be the INFN would be over 655 or so. So basically right here, okay? Stop is under 450, and target, as I said, it's a long-term play, $12. On the INFN, XNET is very similar. I like the INFN slightly more, I think, but this over 425, and then target is $7. This should be 720. Okay, on the XNET. So these two look similar. Notice on the XNET it gapped down, and then it filled the gap. It completely negated the gap. So it actually looks higher. It just needs to take out 424. Okay. On the XNET, and then stop. It's a big stop because it's a long-term play and it's a sloppy pattern on the daily chart. And then the INFN we talked about over the base, stop under the spot, this pivot right here. SPPI is a daily buy setup. It looks decent. Look, I said earlier, when you're looking to predict the top, okay, you want the bars to get consecutively bigger and bigger, and then you get the acceleration, like so, right? The bars are getting bigger and bigger. In the same, that's when the market, like for example, Tesla right now might, one more big green bar like this, we might see a top on Tesla. Okay, one more pop, or if we gap up on Monday tomorrow, or if we move up a few more bars in a row, we might be getting a top. Tesla might top out, likely will. Of course, it's hard to trade because it has a cult following, so it just keeps going usually. But in the same way, when you're looking for a pullback to play long, so when you're looking to catch the top, the stock is going climactic, you're looking to catch the top, to get in at the top, you want to see big wide range bars. Okay, when you're looking to play long, a pullback, you don't want to see a wide range red bar starting the move, which is what we have here. You want to see a small bar starting the move. So that's the worst thing about the SPPI. The best thing about it is that it does look higher on the weekly chart as a transition A. So it does look higher on the weekly chart, but the daily is not the best, to be sure. I don't have a great list this week, by the way. It's not a great list. SVC, okay, this is a mortgage stock, mortgage REIT. and SVC, IVR, MITT, I think they are poised for a pop. That's the IVR. MITT. IVR I played long here as a breakout. It went up, I don't know, from 280 to 840, but unfortunately I sold it the next day here. But it still was 100% probably gain in just 2 days. So I think they pulled back a lot, and I think they're poised for a pop. They're damaged beyond repair, in my opinion, but I do think they pop to the 20 MA. So the IVR, MITT, there's more. MITT is a little weaker. It would have to clear the base for sure. SVC of the three would be my favorite of the three that I just showed you, and there's like 20 of them, mortgage REITs, but this would be the favorite. Over 634, long, stop under 585, okay, and target about 750 or this candle's high. I don't know what it is, I don't remember. 760 SVC, okay. TORC, I played it twice, if not 3 times. Breakout, but and it moved, made money, but I got out, and I still like it higher. It triggered already on Friday, so this is not one of the ones that I'm gonna play on Monday, but it's gonna be a watch for the rest of the week. So it looks higher on the weekly. Notice how it's above the 20 and is about to break out on the weekly. Let's take a look at the monthly. Looks good also, has plenty of room to go up to the 20 MA. So I like the TORC, and it's in the right sector, biotech, and low priced. Those are the ones that have been moving a lot. USO I also played 4 or 5 times. The last time I lost a little bit of money on it because I don't know where I played it here and then got out or something like this, whatever, on USO. But I played it here, played it there. At least 4 or 5 times I played. Last time I lost money on, but very little, because I raised the stop and I got stopped out. But notice it didn't follow through to the downside, and now we're going to get another breakout right here. So USO looks higher one more time over the base, which is 29.42, I think is the highest point. 29.42. So above that, the stop would be under the red bar's low, which is 28.20. Okay? The target would be the declining 20 on the weekly chart on USO. Work looks higher, but it needs a large stop. So over the base, and then where do you put the stop? Down here, that's too big. Over here might be too tight. So I like work higher to go back up to $40, but it has a kind of a big stop. The XNET we talked about is like the INFN and is a long-term play. The short list is even worse. Blink likely topped out. This is like Workhorse, but Workhorse already kind of is too late to get in it now. Workhorse topped out, went climactic. Blink topped out and is just starting the rollover perhaps. So I do like it lower to about 550 or so, I would say on Blink. Workhorse, I just added it to show you the work. It's too late on the Workhorse, though it does look lower. Blue gap down and is unable to rally, so I like it short under the base. The one thing I don't like about Blue is that it's probably a biotech also. It says health something, and it's low priced. I made a mistake and I shorted XERS on last week. I don't know which day exactly. It looked like it was gonna be good, but I noticed on Friday after the close it's gapping up against me. And what was the mistake that I made? I mean, it looked good short under the SPAR's low. It looked good, but what was the mistake? Again, pharmaceutical, low price. They've just been gapping up a lot, so it's a mistake to have shorted it. I must have had brain freeze. I just didn't think about it. And so Blue looks very, very good under the base, but I'm noticing that it's a healthcare stock. So if it's a biotech, probably not a good idea. Otherwise, it does really look beautiful under the base right here. Okay, I mean, we have also Nerve that looks lower, NERV, but it's a biotech. I'm not going to do it. NERV looks lower. Not going to do it. FUTU is up a lot and just went climactic. Okay, notice the biggest bar there, biggest volume. So I like it short under the base, under 30.10 as a short. Stop would be over 31.50. And then FUTU, and then FUV is similar, very similar. Are these same company? No, they're not. But same thing, went climactic and now looks lower. So these, I'm okay shorting the ones that go climactic. I'm just I would be worried about shorting something that's down a lot, like the FUTU or the XERS, right? So those two I'm okay with short. ODP, a 1, 2, 3 short. I'm surprised the ODP has not done as well as I would think it would have done. You know why? Because think about it. We've had a shelter-in-place order for months now, right? Literally for 4 months, 3 months maybe, 3 to 4. So in a lot of states haven't even reopened yet. They're just reopening. So you would think all the office, that the people that are working from home have ordered a lot of office furniture, chairs, desks, monitors. You would think a company like Office Depot would have done a little bit better. And I'm just looking at the chart. It hasn't rallied. It hasn't rallied. So I'm surprised a bit. You'd think they would have done a little bit better. So it looks lower as a 1, 2, 3. There's support below, so this wouldn't be a big play. It would only be, that would be kind of my target probably on it. Again, the short list, but it's a tight stop, so it does make 2 to 1 reward to risk, which is what I look for. As I said, the bearish list is not very good. SCS looks good under the base. Notice Steelcase also. What the heck? I mean, isn't that the company that makes these famous chairs, right? So short under the base is not doing well. Stop above it, and then looks good on that. It looks better on the hourly chart, by the way. It has a really nice base on the hourly chart. So just under 10.20, stop would be over 10.62. So it's about a 45-cent stop. Okay, on the and last but not least, this is this is my favorite short. Tell you the truth, this would be my favorite short if it weren't for the price of the stock. Okay, otherwise this looks amazing. We had a gap down and then it got crushed, and then it's been basing for how many months now? In May, all of June, and a part of July. So 2.5 months. Looks lower and it's breaking down. And if you look at the weekly chart, I mean, tell me this doesn't look good. Short. It did trigger already, but it really looks lower. As I said, this is the cleanest short that I got on my list, except the fact that it's low price, and a lot of the low price stocks have been gapping up. But with that said, I hope you enjoyed today's video, and I hope you find benefit in my weekly videos. If you do, I would appreciate if you hit the like button. Also, as I said, if you're interested, I got an ebook for you, a free ebook. Link is in the description if you want to download it. It's a PDF, as a PDF copy. And if you have any questions, just reach out to info@t3live.com. info@t3live.com. I want to say I wish you the best of luck next week. I hope, this upcoming week. I hope you do well in your trading, and I will talk to you soon. Take care, everybody. Ciao.